Another year in the books, and we got 2026 queued up. So today's video is going to be market predictions, and this is the video everybody wants to see because I'm going to be telling you exactly where you should be investing your money, what you should be looking out for in the year to come, and how to best take advantage of 2026 to set you on your path to financial freedom and reaching all of your financial goals. So a lot of people have homework to do. So last year in 2025, Trump passed the Big Beautiful Bill, which is now the Big Beautiful Act. And if you are a tip worker, you need to start tracking your tips and filing them in your taxes to get that deduction from the Big Beautiful Act. If you are 65 or older, there's a new $6,000 deduction if you're single and you made less than $75,000, or if you're married and you made less than $150,000. So if you can control your income and get that $6,000 deduction, that is huge. If you had a kid in 2025, or you're planning to have a kid between now and 2028, the Trump accounts are in full effect. So you're going to have to fill out that form 4547. It's an IRS form to set up that Trump account for your kid. Get that free $1,000. It's a nice little jump start to their financial future. And then the other thing to talk about is if you're in a high tax state. So they increased the SALT deduction. So it was $10,000. It went all the way up to $40,000. And for the longest time, it never made sense to itemize your taxes because the standard deduction was so high. But with that huge jump in the SALT deduction, now it's time to go revisit your old tax returns and see if doing itemized taxes with the SALT deduction is going to save you money on your taxes. And it's something that can help you moving forward. So that's some of the stuff that changed from 2025 to now, and you need to do your homework on. But one other big thing, and this affects a ton of people, is the federal student loan program. It's doing away with a lot of the lower cost plans. And in June of 2026, those low cost plans will no longer be available to people taking out federal student loans. And if you're on one of the older plans that's saving you money, you're going to have to opt in to keep that plan until 2028. And by 2028, it's going to go away, and you're not going to have any choice but to switch over to one of the higher cost plans. And that doesn't sound that bad, but a lot of times it's going to be either a 50% to up to 100% change in what you're paying each month. So it's a huge change in your payments, and you need to start looking for other options. One of my favorite places to actually refinance your student loans with is Earnest. Earnest does a phenomenal job of keeping the rates low, and if a newer rate comes up, allowing you to refinance into those lower rates. A lot of people I've known, and my wife and I personally, were able to pay off student loans very quickly using Earnest and paying it down with those lower rates. I'll leave a link down below if you guys want to check out Earnest to try and refinance your student loans. So that's all the homework that is left over from 2025. So now let's talk market outlook for 2026. So there's been a lot of talk about AI bubbles and the market being unsustainable, but all that's overblown. If you look at the current stock market, it still is roughly overlaying with the 90s .com bubble. And if you overlay today's stock market with that 90s .com bubble, we're in the year, so 2025 was 1996, and 2026 is going to be 1997. We still got a few years to run. We still got some time in the tank for the market to keep taking off, to keep getting growth from all this AI stuff. So if you're sitting on the sidelines expecting the market to implode, don't. But with that said, the market is not going to be a smooth ride this year. We like to call this a bucking bull market. So it will close higher, and I predict an early peak, probably late January into early April, around 7,200 in the S&P 500, and then October somewhere between 7,800 and 8,000 in the S&P 500. And to close the year, after October, it will probably tail off. It won't stay at those peaks at the end of next year. And that almost directly follows what we saw in 1997 during the dot-com bubble. And that sounds crazy, but so far, this stock market has been almost directly trending with that stock market. So just be aware that there's going to be a lot of volatility in the market. You'll get an early peak, there'll be volatility in the middle, and you'll get a late peak, and there'll be volatility at the end. Just hang on for the ride. It's going to be wild. Keep buying those dips, keep dollar cost averaging, and you're going to be fine. Take a long-term approach to this, and all the money that you're putting in is going to be worth way more 5, 10, 15, 20 years from now. The other big market change that's happening this year is that Jerome Powell, the Fed chair, he is stepping down in May of this year. And that's going to give Trump the opportunity to put his Fed chair in place. So Kevin Hassett is the front runner to be elected as the new Fed chair. And you're like, well, why am I talking about Fed chair? So if he gets his guy as the Fed chair, that means that they're going to lower Fed rates more next year. And that also means that they might start doing something called quantitative easing. And all of that means is they're printing money. They're printing lots and lots of money. So expect inflation to tick up, but also expect an infusion of liquidity into public equity markets. So that means a positive stock market and a positive stock outlook for the next year and probably the next couple years, just based on that infusion of liquidity into the public markets. Let's see. So you got to take care of your base. So before we talk individual investments, you got to take care of the big picture. So if you aren't automating your finances, if you haven't set up where all your bills are getting paid automatically, all your investments are happening automatically, all your short-term savings goals aren't happening automatically, get all that set up. Absolutely get all that set up. If you have to think about doing the right thing every single month, you're not going to do the right thing, right? So when you automate it, you make the chances of you doing the right thing way, way higher. It's much easier to set it in motion and not have to think about it than every single month having to be disciplined and manually move money to your savings account, manually move money to your investment account, manually pay all your bills. Automate as much as possible. It frees up bandwidth. You don't have to think about it, and you're going to end up with a better outcome. So that's the first thing. And you might be wondering, well, what do I buy? You said the stock market's going to do well. I don't know what to buy. Just buy broad-based index funds. So S&P 500 and NASDAQ 100. I like VOO for S&P 500. If you want something a bit more aggressive than that, do VOOG, which is the S&P 500, pulls out the growth stocks out of that index. And then the NASDAQ 100 is more of that tech focused. It's going to take advantage of more of this AI wave that we're going to be seeing over the next 5 to 10 years. And I like VGT is my ETF of choice for that. There are obviously more aggressive leveraged ETFs that you could invest in. There's 2x and 3x leveraged ETFs of the S&P 500 and the NASDAQ 100, but I don't think those are suitable for most people. But if you are that 1 in 100 person who can actually sustain that volatility, it's something worth looking into. And then Let's see here. Tackle high interest rate debt, right? So the Fed lowered rates several times in 2025. Like I said, they're probably going to lower rates a few more times in 2026, especially after Trump gets his guy in the Fed chair. And that means that you'll probably have opportunities to lower any of the high interest rate debt that you might have on your books. That's debt consolidation loans. That's lowering any mortgage rates that you might have purchased in the last several years at those high sevens, high sixes. You might be able to refinance into something lower. And if you're refinancing mortgages, I highly encourage that you look at 15-year mortgages over 30-year mortgages. You pay a little bit more, but you get way more bang for your buck. And I actually did a whole video talking about how refinancing into a 15-year mortgage and doing bi-weekly payments was going to save me about $300,000 a year. So if you guys want to check that out, you can check that out. But tackle all that high interest rate debt. So we talked about the homework you have to do. We talk about the base that you need to establish. And now we'll talk about that 10% asymmetric investment. So if you're new to the channel, I'll explain this to you real quick. So what you want is you want a small portion of your investments to have the potential to outperform all the rest. You want that small 10% to be invested aggressively in things that have the potential to way outperform the rest of your portfolio. And if it doesn't, if it fails, if it doesn't work out, you still have that 90% to give you a stable, solid financial outcome. So that 10% asymmetric investment for 2026, my biggest recommendation for folks is taking advantage of some of the tax stuff that has come into place. So the 100% bonus depreciation from the big beautiful bill is going to make it possible to invest in real estate, take very large tax deductions, taking 100% depreciation on assets, and any capital intensive businesses that you might be considering. That 100% bonus depreciation is going to make it a much better option to invest your money into. And then the next thing is taking advantage of this AI wave. So if you're looking at businesses, you want to look at AI adjacent businesses, things that take advantage of AI, they integrate AI, or they are feeding the AI beast. So a good example of this. So I expect 2026 to be the year where you see a surge in AI agents, where you can actually turn over tasks to AI agents and they'll work for hours or even days at a time on that task. And if you are able to structure it correctly, you can build out an entire AI agent workflow, an entire AI agent business. And I would say before 2030, we'll see a single person AI business that's worth over $1 billion. So why not you? Why not invest your time and energy trying to learn these AI agentic workflows and build an AI agent business? The other big thing is just feeding the AI beast. So there was a company called McCore. It was some early 20-somethings, and they were doing something called RLHF. Reinforcement learning human feedback. And essentially, it's cleaning the data to give better data to the AI models. And these early 20-somethings took this reinforcement learning data business and turned it into a $10 billion business. And there's tons of opportunities like this in AI. There's all these small tasks in data, in infrastructure, in energy, that if you invested correctly, or if you help eliminate a problem in that AI pipeline, you can make billions and billions of dollars. Across the next 5 years, they're going to invest almost $5 trillion into AI. And the way I like to think about this is AI is a 5-layer cake. So you have an infrastructure layer, you have a chips layer, you have an energy layer, you have a models layer, and you have an applications layer. And you can invest any of those 5 layers and you can make a ton of value. So an example, in the infrastructure layer, we're talking about companies like Microsoft with their Azure cloud services that are giving compute to businesses, or Amazon Web Services, which is giving compute to businesses, or CoreWeave. So CoreWeave is a company that I really like and I'm personally invested in. None of this is financial advice, but it's a company that I'm personally invested in and it has some backing from NVIDIA. And in the chips layer, obviously you have NVIDIA. You could also buy Taiwan Semiconductor. It's a very popular business. They essentially have a monopoly on the production of the chips for all the AI build out. And then for the other layers, a lot of those companies are private. So the problem with private companies is there's not a clean ticker symbol that you can buy into. You have to be an accredited investor to buy into them. They're trying to change that. So the Invest Act got proposed late 2025. It has to make it all the way through the House and Senate. But if that goes through the House and Senate, in 2026, you'll have the opportunity to take a test that will qualify you as an accredited investor and will open up a world of investments that you don't have right now. So this is private equity, this is hedge funds, this is startups, this is private credit. There's all these businesses, there's all these investments that are only available to the ultra wealthy. They're kind of gatekeeping that. If the Invest Act goes through and they actually give you a test where you can take the test and be certified, you can start actually investing in some of these private market deals. And private market deal flow has been a big piece of what I did in 2025 and a big piece of my strategy during this Trump presidency to try and build my net worth. So some of the private companies that I'm in, just full disclosure, OpenAI, Anthropic, XAI, Apptronic, and Grok. Not Grok like the AI model, but Grok, it's a inference chip producer. So there's a few other private companies that I'm going to have on my radar in 2026. So I want to buy Anduril, which is a defense AI company. They actually recently won a defense contract for AI fighter jets. They're flipping the whole defense structure on its head, because before these defense companies would propose a plan to the government. They get all this money from the government to research it and develop it, and then eventually deliver the product way over schedule and way over budget, where Anduril is coming to the government with a pre-built product that they can just buy off the shelf for as many units as they want. And I don't really have to explain to you why that is a more desirable structure than investing billions and billions and billions and potentially not getting anything. In that same vein, there's another company called Mac Industries. They're another AI defense company. These are both private. If they IPO in 2026 or 2027, I probably invest more money in the public markets, but they're both private. Mac Industries, their big advantage is they're working on hydrogen combustion engine technology. So instead of having to refuel with standard fossil fuels, they can actually take water and then break it apart into the hydrogen. So these systems can operate autonomously in the field indefinitely, just refueling from water sources instead of having to come back and get traditional refuel. So you have these autonomous weapon systems that can operate almost unlimited time frames and refuel in the field and stay deployed. So I think there's a big use case for them in our current defense budget and the US defense plan. So between Anduril and Mac Industries, those are two private companies that I'm hoping to invest in 2026. And then the other one is an energy. There's two energy companies that I'm looking at. They're both private. They're both fusion energy companies. So Commonwealth Fusion Systems, they're working on a tokamak fusion reactor. They're probably going to be the first commercial fusion company. They're the closest to building a commercially viable fusion plant. So they'll be the first to market. And I think fusion is going to be a huge unlock for AI. It's going to be a huge unlock for the future of our economy and the world in general. But Helion is a little different in their approach to fusion. So where Commonwealth Fusion Systems has a fusion reactor, and then it's going to create heat, which is going to create steam, which is going to spin a turbine and create electricity. Essentially, the hot rock makes steam, spin turbine model that we've always used for energy production. Helion is approaching it differently. So just how their reactor works, they're going to be creating charged particles, electrons, and those electrons they can use to produce current directly. So the fact that you can eliminate that secondary plant and can just directly produce energy is going to make them a lot more efficient. They're going to have a much smaller footprint as far as where you can place them in their design. And it'll be a huge unlock if they can bring that to the commercial markets in the near future. So those are two energy companies that I'm targeting and I hope to invest in 2026. And it's right in my wheelhouse. So I kind of know what I'm talking about. At least I would hope I know what I'm talking about. And then the other asymmetric investment, and I kind of mentioned this in my 2025 video where I was talking about the Trump economy, is the PayPal Mafia. So last time I was saying it was the Elon investment, but I'm expanding it to the PayPal Mafia. And if you're not familiar with the PayPal Mafia, it's essentially a bunch of the people who founded PayPal. And after they left PayPal, they went on to do great things. They're some of the best investors of all time. And a lot of the businesses that they've made have gone on to make tons and tons of money. I did a simulation where you take $10,000 a year and you're investing it across 15 years. So $150,000 across 15 years. If you put that money in the S&P 500, that $150,000 turned into about $550,000, which is a really great return. That's a phenomenal return. But if you were to take all the members of the PayPal Mafia and you were to invest into their businesses and investments, that $150,000 would have turned into about $5.2 million, which is a huge difference, right? And if you're like, well, I don't want to invest in the entire PayPal Mafia. I don't even know who they all are. I'm not familiar with all these businesses and companies. That's a lot of work. If you narrowed it down to where you were just investing in Elon and Peter Thiel, then that $150,000 would have turned into $12.2 million, which is huge, right? And the nice thing about Elon and Peter Thiel is that they actually have some publicly traded companies that you can go after. Elon obviously has Tesla. He just signed a new contract in 2025 for $1 trillion. And in order to make good on that contract, he has to make the stock price and the value in Tesla skyrocket. So it's a pretty safe bet that he's going to do everything in his power to do that. They're well positioned on robotics. They're well positioned on AI. They're well positioned on self-driving. They have batteries. It's a solid company if you're trying to get exposure to AI and exposure to an asymmetric investment in your portfolio. And then for Peter Thiel, his main project is Palantir. It's another AI defense company. And if you would have bought in at the beginning of 2025, you look like an absolute genius. This company has been skyrocketing. I've been eyeballing this company since the middle of 2025, but their evaluation is just so sky high. I'm waiting for a pullback. And there's going to be some volatility next year. So on some major pullbacks next year, I'll probably be looking to add some Palantir to my investment portfolio. So that is the PayPal Mafia investment. And that Mac Industries company that I mentioned is actually also a PayPal Mafia investment. So my overall outlook for 2026 is very, very positive. I think you'll make a killing just buying the index. If you take nothing else away from this video, buy the index, buy the S&P, buy the NASDAQ 100. On any of those dips, on any of that weakness in the market, don't freak out. Buy some more. Keep buying. Don't stop buying. And you will not regret it at the end of the year. And make sure all your finances are automated, guys. Get that solid base. Don't focus all your money into these, home run, rocket ship investments. Just keep it simple and you'll do great. And before we close, crypto. So crypto was one of the things that I mentioned in my video last year, saying that I thought it was going to do really well in 2025. I don't think I'm wrong. I think I was just early. So if you look at the landscape of what changed from 2025 to now, Trump did a lot of things that were very, very pro-crypto. He signed an executive order to establish a Bitcoin reserve. He signed the Genius Act. He signed the Clarity Act. He signed the Anti-Centralized Bank Digital Currency Act, which is going to prevent centralized banks from making their own cryptocurrency. There's a lot of pro-crypto legislation that came out. And there was a ton of crypto ETFs. There was a ton of institutional investment into crypto. It was a consolidation year for institutional investors to get their ducks in a row and get their crypto investments in order before the market takes off. And I think it's going to be another year like that. It's going to be slow growth where institutional investors are pouring in and you get some slow growth into crypto. And the big move is probably going to happen in 2027 or 2028. So Bitcoin has its next halving in March of 2028, which means the difficulty of mining future Bitcoins is going to spike, which means the value of the Bitcoin has to spike to make it worthwhile for people to continue mining Bitcoin. And that means that between now and 2028, you're going to see some volatility, but by the end of 2028, it's going to be substantially higher than it is now. And there's a lot of people calling for $1 million Bitcoin by 2030. So I don't know if that's right. I don't know if that's wrong. But even if Bitcoin is 500,000, 600,000 in 2030, that's a huge move from where it is sitting right now, which is right around $90,000 of Bitcoin. So those are my asymmetric bets. those were my recommendations for what you should be doing for your overall base. And I told you what I am personally doing for 2026. Let me know in the comments below what you're considering investing in this year and what you're most excited about this year. Keep getting 1% better every day, and I'll catch you guys in the next video.